Have you heard of California's Shared Equity Home Loan Program? Well, in this episode, we're going to discuss some of the details, some pros, some cons, and see if it's the right program to help you buy your first home. Welcome to the Homeowner Prep podcast, where every week we educate and encourage aspiring homeowners to help them buy their first home faster. If you aspire to own a home, you're in the right place, so enjoy. Do us a favor and leave a review, a rating, and be sure to subscribe. Now let's get to this week's episode. Hey, real quick before we start, I want to ask you a question. How long are you going to wait before you decide to get started? I mean, you want to buy a house and you're earning income, so what's holding you back? Visit our website at homeownerprep.com/start. You can take an online assessment and set up a free 30-minute call, and we're going to put a plan together to help you get from where you are to where you truly want to be. So don't let fear hold you back from buying your first home. All right, now back to the episode. Hello and welcome to another episode of the Homeowner Prep podcast. I'm your host, Eric Helon, and on today's episode, we're going to be talking about a potential loan program that's in the works in the state of California, and it's a shared equity home loan program. And I'm going to talk about what that is, what to expect, some of the pros and the cons, and some of the finer details of the program to see if it's truly the best program to help you buy your first home. Now, the program is called California Dreamers for All, and this was presented in the Senate over some time. It's been a few years that this has been in the works, looking at studies from 2020 and 2021, but it seems like the program is really gaining traction. In fact, Cal HFA, who's a big provider of down payment assistance programs, is actually working to incorporate this program and really launch it. And they're looking at potentially having this program available to home buyers by the middle of 2023. So it may be coming very, very soon. So I want to kind of cover the details of the program and helping you understand what shared equity is, how it works for you and against you, and see if it's truly the best program for you. The first thing to understand is that this is a program that was launched through the state of California. Now, if you're not in California, this doesn't really apply to you, but they are looking at launching programs similar to this in other states, depending on the success of it here in California. So it is something to keep an eye on, keep on the radar, because even if you're not in California, potentially your state could be looking to see what California does and how successful it is in order to launch it in their state. So definitely keep an eye on it. Now, the way that the program works is they're going to set aside $1 billion into a fund to be used to help first-time home buyers buy their first home. Now, again, in order to be considered a first-time home buyer, you have to either have not owned any property, any real estate, or if you haven't owned a home in the last 3 years, you are considered a first-time home buyer once again. So it is particularly for first-time home buyers, and it is focused on low to moderate income earners. So they've looked at their numbers and they said, hey, there are thousands of homeowners who can work with this program or could have worked with this program in 2020 and 2021. And this could have helped them get into the first home and start building equity and take advantage of all the appreciation that we've been seeing over the last few years. Over the last 2 to 3 years, we've seen 8 to 10% appreciation in the state of California, which unfortunately has priced out a lot of first-time home buyers, a lot of people who are renting who wanted to buy their first home because they just couldn't come up with the down payment. So this program would address that need and help thousands of homeowners each and every year buy their first home and get into their first place. So again, there's going to be $1 billion set aside for this fund, and they're going to use that to help these first-time home buyers. Now, when we talk about income, every county has an AMI, which is the area median income. So look it up in your county. If you need help, definitely reach out to us and we can find that information for you. But what they're looking at is, hey, these are the moderate income earners, and then these are low income earners. Now, here in San Diego County, the moderate income earners actually earn $106,000 for a family of 4. It is based on the household size as well. So just on a typical family of 4, $106,000 is considered median income in San Diego County. Now, low income is actually just over $104,000. So if you're making over $100,000, you would think, well, I can't qualify for a down payment assistance program. But in actuality, you can. And that's what this program would be made for, is to help those who earn good incomes, but they just have a hard time saving enough money for the down payment. So once you figured out that you do earn the income to be considered a moderate or low income earner, the next thing to consider is how much of the down payment you actually need to come in with. So the way the program works is that they're estimating that most first-time home buyers will come in with about 3%. And whether they come up with that money on their own or they're gifted that money, they will use that 3% to contribute to the down payment and closing costs of the home. Now, the state of California will cover the difference up to 30%. So they're willing to give 30% of your purchase price for down payment and closing costs. But they do figure that they'll probably be giving about 17% for the majority of the loans because they're hoping that buyers will come in with 3, they'll provide the 17%. That way you have a 20% down payment. You're not forced to pay the mortgage insurance when you come in with less than 20%. So that's the idea of the program is that, hey, a home buyer is going to come in with 3%, whether it's their own funds, whether it's gifted funds, or they're using another down payment assistance program, which they'll allow you to combine those down payment assistance programs. And the state will cover 17% to make sure you're not paying the mortgage insurance, which can be an additional cost of home ownership. So what do you get for that 17%, right? The state's not just going to give you that money. Well, this is where the shared equity portion comes into play. When you decide that, hey, I've been living in this house and I want to either A, refinance it into a different loan, maybe I want a better rate, maybe I want to take some cash out, buy another property, whatever the case may be, when you decide to refinance, then you will have to pay that back and a portion of the shared equity. Also, this will take place if you want to sell the house and then buy a different house, then that 17% plus shared equity would be due at that time as well. So let's dive into what is the shared equity portion. Let's say you're buying a house for $500,000 and you're coming in with 3%. So you have $15,000. Again, whether that was coming from your savings, a retirement fund, or a gift, you can bring in the $15,000 yourself. And the state is going to cover the other $85,000 to put on your down payment and your closing costs. So how does that come into play when it comes time to refinance or sell? That $85,000 would become due plus 17% of the equity that you've built from the time that you purchased the home. So let's say the home appreciated and it's worth $600,000. Well, now you owe 17% of that extra $100,000 back to the state. And the state is going to take those funds. They're going to take the original 85,000 plus the 17% of the 100,000, so another 17 grand, and they're going to put that back into this $1 billion fund. And that's how they plan to keep replenishing this account, this fund, to keep helping more and more first-time home buyers. So is that fair or not? What do you think? I mean, we love to hear from you to see what you think about that type of shared equity loan program, because I think that it will help a lot of first-time home buyers, but there is something that you're going to have to give in return. And you may look at that as, hey, I'm willing to help out and replenish this account and help other first-time home buyers. Our goal has always been that as we're helping first-time home buyers, that they learn the process and they're able to educate other people and help other first-time home buyers. And so this program would be similar to that because those funds would then be replenishing this same fund and be able to be used by more first-time home buyers each and every year. So that is something to consider. You can decide if that's truly something that you want to participate in. But if it helps you get into the home and it helps you get your foot in the door, then I think it's a great idea because, again, you're building that equity and appreciation is working in your favor. Again, California is seeing 8 to 10% appreciation every year, and that adds up. I mean, on a $500,000 home, if you have 10% appreciation in 1 year, that's an extra 50 grand. And so you can see how that kind of works against you if you're not in the game. If you're renting and trying to save, how do you save 50 grand to combat the appreciation that's taking place here in California? So I think it's a great program, but I'd love to hear your thoughts, see what you think. And if you have any questions, definitely want to hear from you as well. The issue that they're really trying to address is the fact that only 26% of California households can actually afford to put a down payment and buy their first home. So that's the issue that we're trying to address. And we have to think outside the box to see how we can put these programs to work, and especially when California is sitting on a surplus, how we can use those funds to really help people start to build generational wealth and then use that wealth to pour back into our economy. So I agree with the program. I tend to like the program. The pros outweigh the cons to me. But again, love to hear your thoughts and see what you think. If you have any questions or you need help kind of understanding the home buying process and maybe getting some more information about this type of program or programs in your area, definitely don't hesitate to reach out to us. You can reach out to us on our website at homeownerprep.com/start. There you can get started with us. Again, if you're just trying to understand the home buying process, you can download our ebook, which will guide you through that. If you want to take an online assessment to see how close you are to buying your first home, you can do that there as well. And if you're ready to go and you just want to be connected with a local real estate agent or loan officer in your area, you can fill out a referral form on that same page and we'll get right back to you with some contacts in your area. If you have a direct question that you just want to ask, the easiest way to do that is to reach out to us on social media. You can find us on Instagram. That's where we tend to get the majority of our questions at Homeowner Prep. So feel free to reach out to us, shoot us a DM. We'd be happy to help. I hope you got some great value from today's episode. I look forward to providing you with some great information on the next episode as well. But until then, be blessed. If you've enjoyed this show and got some great value from it, please be sure to rate and review. And if you're checking it out on YouTube, please be sure to subscribe. That really does help us to continue the show and bring in some great guests to help you on your home buying journey.